We are looking at Rio Tinto, which provided its shareholders over the last 12 months a dividend yield of over 12%. Rio Tinto, ticker RIO, is outstanding for dividend collectors and value seekers alike. Australia's Rio Tinto is a mining and metals company operating in 35 countries worldwide, with operations focused on gold, copper, nickel, and iron ore. Rio Tinto stock has risks inherent to any mining sector investment, but it is among the best picks in the natural resources category. Unfortunately, mining stocks sometimes have a volatile reputation. Indeed, there's no need to pigeonhole an entire segment of stocks, as Rio Tinto is a financially solid business. Value hunters should, therefore, definitely have Rio in their crosshairs. They supply the metals and minerals used to help the world grow. They are one of the world's leading producers of iron ore. They operate an integrated portfolio of iron ore assets, a network of 17 iron ore mines, 4 port terminals, a rail network spanning nearly 2,000 kilometers, and related infrastructure in the Pilbara region of Western Australia. They are also a global leader in aluminum, with a large-scale, vertically integrated business, bauxite mines and alumina refineries, and smelters producing aluminum. Their operation consists of 4 bauxite mines in Australia, Brazil, and Guinea. They also have 4 alumina refineries in Australia, Brazil, and Canada, 14 aluminum smelters in Canada, Australia, New Zealand, Iceland, and Oman, and they also operate 7 hydropower plants which generate most of the electricity they use in Canada. Their copper operation spans the globe, from Mongolia to Chile to the US, and occupies various mining life cycle stages, from exploration to rehabilitation. Global demand for copper is set to grow, driven by urbanization, industrialization, and increasing requirements for renewable energy. Copper plays a crucial role in electrification and power production. Their minerals product group provides materials essential to various industries, ranging from agriculture to renewable energy and electric vehicles. They produce high-grade, low-impurity iron ore pellets and concentrate titanium dioxide and borates from their operations in Africa, Canada, and the US. Minerals also include their fully integrated diamonds exploration, mining, and sales and marketing business. They provide a reliable supply of white and colored diamonds, including the renowned Argyle pink diamonds, the world's most sought-after diamonds. Amazingly, Rio Tinto has provided a 60% average payout on ordinary dividends over the past 5 years. Now, that's what you'd call a company that values and rewards its shareholders. Let's dig deeper and see what the past full year results looked like. Last year they had earnings before interest, taxes, depreciation, and amortization of $38 billion, which was a 44% return on capital employed, with a free cash flow of $18 billion. Comparing 2021 to 2022, they increased sales revenue by over 42%, accumulating $63.5 billion in 2021 from $44.6 billion in 2020. Net earnings increased by over 116% to $21.1 billion from $9.8 billion in 2020. Despite weaker demand and mill operating restrictions during the second half, China's fiscal year 2021 crude steel production exceeded 1 BNT for the second time. Demand recovery in the rest of the world maintained its momentum. Aluminum saw a solid global demand recovery led by packaging, transport, and building and construction. Higher commodity prices translated into high conversion prices, which converted into more substantial earnings. Their iron ore had solid financial results despite challenging conditions. They are setting up Pilbara iron ore for more robust performance. The aluminum operations also had outstanding financials, with free cash flow more than doubling. Rio Tinto is staying disciplined and reinvesting for growth and decarbonization. Total decarbonization investment of roughly $7.5 billion from 2022 to 2030, predominantly in the second half of the decade. Balance sheet strength is an asset, offers resilience, and creates optionality. They invested $7.4 billion and distributed $15.4 billion of cash to shareholders in 2021. They have a consistent 6-year track record of shareholder returns. Rio shareholders have been provided returns of 40 to 60% of underlying earnings on average through the cycle. They have set a goal of being net zero by 2050 across their operations. Cashing in on commodities. All their commodities are vital today, towards 2050, and beyond. They operate in 3 out of the 11 advantageous regions for renewable energy. They are near large power producers and consumers. They are uniquely positioned in advantaged green energy locations like Pilbara, Quebec, and Queensland. Lithium demand and supply in net zero carbon scenario. By 2030, electric vehicles will account for up to 55% of annual light vehicle sales. Notably, those figures represent 2021 versus 2020. Just imagine how much better Rio Tinto can do in 2022, a year when supply shortages and geopolitical turmoil are making commodities scarce and expensive. Baglol focused on Rio Tinto's nickel asset holdings, which could yield substantial revenue over time. As he pointed out, Rio Tinto owns a 75% stake in the Finnish Enonkoski nickel project and is involved in bringing the Minnesota-based Tamarack nickel project online. As crucial as nickel is, investors should also consider Rio Tinto's involvement with the lithium market. Lithium has multiple uses, but the one that traders frequently discuss is lithium's use in electric vehicle batteries. In this vein, Rio Tinto's crown jewel is the Jadar project in Serbia. It might take a while, but once the Jadar project is in total production, the mine is expected to produce roughly 58,000 metric tons of lithium carbonate per year. On top of that, Rio Tinto just announced that it finalized the acquisition of the Rincon lithium project in Argentina. Reportedly, the company had previously agreed to purchase the project from Rincon Mining for $825 million. Rio Tinto chief executive Jacob Stausholm touted the benefits of this potentially mineral-rich acquisition, saying, "Rincon strengthens our battery materials business and positions Rio Tinto to meet the double-digit growth in demand for lithium over the next decade, at a time when supply is constrained." Rio Tinto brings a strong foundation for growth, decarbonization, and shareholder returns. Their last dividend paid was $4.17 per share plus a special dividend of 62 cents, totaling $4.79. At the time the dividend was paid out, the share price closed at $74.85. A $100,000 investment would provide you with 1,336 shares, providing you a payout of $6,399.44. Let me know what you think in the comments. Buy, hold, or sell? I enjoy sharing my insight with you and helping both of us become better traders and investors and find some level of success. Thank you for watching. Please check out my other videos and the description for great deals and sign-up bonuses.